You sit at your desk. Charts are flashing. Bitcoin just dropped 5% in the last 10 minutes. Your heart races. Should you sell now before it drops more? Or buy the dip like everyone on Twitter keeps screaming? This is the moment where every trader faces the invisible battle. Not against the market, not against whales or bots, but against themselves. Emotional trading versus rational trading. It's a clash that plays out every single day in the crypto world and every other financial market. Some traders follow gut feelings, instincts, or even social media hype. Others stick to rules, systems, data, and cold logic. But only one of these approaches wins over the long term. And knowing which one to choose could be the difference between growing your portfolio or losing it all. So let's dive into the core of this struggle. Emotional trading feels powerful. It's fast, it's intuitive, and sometimes it even works, especially in volatile markets like crypto, where momentum can change within seconds. You feel the adrenaline, the excitement of timing a perfect entry, the high of making quick profits. It gives you that gambler's rush, but it also brings anxiety, overtrading, regret, sleepless nights, and massive losses. Emotions like fear, greed, hope, and revenge don't just influence our trades. They drive them, especially when we're unaware. Think about the last time you sold too early, or the time you held too long, convinced it would bounce back. That wasn't logic guiding your hand. It was emotion. And emotions lie. Now, let's flip the script. Rational trading doesn't feel as thrilling. There's no FOMO, no impulse, no chasing pumps. Instead, it's slow, methodical, and disciplined. You follow your trading plan. You respect your risk limits. You analyze trends, patterns, and macro indicators before pulling the trigger. And here's the truth most beginners hate to hear. Rational trading wins long-term. Every single time. Because the market isn't emotional. It's a machine. It doesn't care about your feelings. It doesn't know that you just lost money on a bad trade and want to make it back. It doesn't reward hope or panic. It rewards consistency. And only traders who learn to master their emotions and replace them with rules tend to survive. Let's talk about what emotional trading really looks like. You FOMO into a coin that's already up 200% in a week. Why? Because you're afraid of missing out. You refuse to sell a token that's tanking because you believe it'll come back. Why? Because of denial. You double down on a losing trade, thinking, I have to win it back. Why? Because of revenge. All of these behaviors come from a place of emotion, not logic, and they almost always end in regret. Now look at rational trading. You have a defined entry, a clear stop loss, a take-profit target. You stick to your plan regardless of what the market or social media is screaming. You're not trying to catch every move. You're trying to make consistent gains over time. It doesn't feel exciting, but it works. Here's an example. Imagine two traders. Let's call them Alex and Jordan. Alex is emotional. He trades based on Twitter hype. He sees a coin trending and apes in without research. When the price drops, he panics and sells. Then the price bounces, and he buys back in at a higher price. He's stuck in a loop. Highs and lows. Wins and losses. Emotionally drained, but always chasing the next big thing. Now Jordan is rational. Jordan picks a few strong projects with solid fundamentals. She sets a DCA strategy. She trades based on chart patterns, volume, and news catalysts, but only after analyzing risk-to-reward. She uses stop losses, takes profits at set targets, and logs every trade in a journal. She doesn't panic. She doesn't chase. She doesn't need luck. Fast forward 6 months. Alex might have had a few big wins, but his losses outnumber them. His emotions caused him to overtrade, ignore risk, and destroy his portfolio. Jordan might have missed a few pumps, but her account is green. Her strategies compound. Her risk is managed. And more importantly, she's still in the game. This isn't just a made-up story. It's the pattern that plays out over and over in trading communities worldwide. The emotional trader burns out. The rational trader builds wealth. Now, let's go deeper. Why are emotions so powerful in trading? Because money is emotional. It ties into our identity, our fears, our dreams. Losing money feels like failure. Making money feels like validation. Our brains are wired to seek pleasure and avoid pain, and the markets trigger both. When your coin moons, you feel euphoric. You want more, so you double down. When it crashes, you feel fear. You panic sell, then regret it. This cycle is emotional addiction, and it's why so many traders fail, not because they don't understand charts, but because they never master themselves. So how do you shift from emotional to rational trading? Step 1. Have a plan. Before you enter any trade, know your entry, stop loss, and exit strategy. Write it down and follow it, no matter what the market does. Step 2. Manage risk. Never bet more than you're willing to lose. Use proper position sizing. Diversify. Protect your capital like it's your lifeline, because in trading, it is. Step 3. Control your environment. Social media can trigger FOMO and panic. Unfollow hype accounts. Avoid pump groups. Follow data, not noise. Step 4. Reflect. Keep a trading journal. Log every trade, including your emotions at the time. Over time, patterns will emerge. You'll start to see how your feelings affect your decisions, and you can begin correcting them. Step 5. Take breaks. Trading fatigue is real. If you're feeling overwhelmed, step away. The market will still be there tomorrow. And finally, remember this. Mastery takes time. You won't become a rational trader overnight. You'll still make emotional decisions. You'll still chase once in a while. That's okay. The goal isn't perfection, it's awareness. Every time you catch yourself reacting emotionally and correct course, you level up. Every time you stick to your plan despite fear or greed, you gain confidence. That's how consistency is built. That's how portfolios grow. So which one wins? Emotional or rational trading? Over the long term, it's not even close. Rational trading is boring, but boring is profitable. Emotional trading is thrilling, but thrill fades and often ends in losses. The traders who win in the end aren't the ones who caught every pump or nailed every entry. They're the ones who survived the longest, who learned from mistakes, who built systems, who traded with discipline, not dopamine. So the next time you feel the urge to jump into a trade based on a tweet or sell because of a sudden dip, stop, breathe, zoom out, ask yourself, am I reacting or responding? Because that single moment of clarity could be the difference between blowing up your account or building wealth that lasts. In the world of trading, emotions will always whisper, but logic must always lead. And when you learn to trade like that, not just with your eyes, but with your mind, you've already won the hardest battle. Because in the end, charts don't make you rich. Strategies don't either. Discipline does. Patience does. Rationality does. So trade smart. Trade calm. Trade like a pro. That's how you win. Long term. Every time.